Welcome back to another Real Estate Roundtable. I'm your host, Andreas Senie, founder of CRECo.ai, real estate brokerage owner and third-generation real estate developer. For this segment, our first of its kind, we are talking with Anna Maria from Inland Green Capital. And if you would, bring her on in. We'll do introductions in our true show format. 3 segments. First is introductions. The second is going to be the who, why, and what of Anna Maria as it relates to green lending, nonprofit work, and really how you got here. Anna Maria, welcome, and thank you for joining us.
Well, thanks for having me today. And it's Anna Maria. It's very
Anna Maria, excuse me.
That's okay.
I know you've been a guest on Jim's show before. Believe it or not, he said my name wrong for a full year. And I was on every month, and it was a mental block. So I do apologize there.
No problem.
But as is our format, if you would, go ahead and introduce yourself. You do it best. I know you as a foremost expert in green energy through our friends at Inland, and I'm really looking forward to diving deep into this sector with you today.
Well, basically, I have the role of Senior VP, Director of Business Development for Inland Green Capital. And I've been with the company almost 4 years now. Actually, the PACE industry, property assessed clean energy across the country is fairly new. It's less than 11 to 12 years. So basically, the first deals were closed at the end of 2011 into 2012. So when you consider it's a novice industry, and I'm just very excited to be a part of it, being impactful, being able to change the climate and energy savings from project to project, one project at a time. So I'm just thrilled to be in this industry, and I think you have to love what you do in order to do it somewhat decently well.
Absolutely, and for those tuning in for the first time, the CPACE program itself, and even now in our industry and every industry, the focus on profit and impact together. How can we make an impact on our world while making a profit? Hopefully, when we can do those together in tandem, in alignment, even better. So what is the CPACE program for those that don't know overall? How does it work?
So basically, it's up to 100% financing, which is just in and of itself huge because, you're not going to find that in any conventional lending product. Of course, there are limitations. There are loan to values that need to be met. It's not just free 100% money, but it does cover it's fixed rate long-term financing for any energy efficiency kind of project, such as HVACs or maybe modernization of elevators or even new windows or building envelope types of projects, as well as renewable energy projects such as solar, geothermal, you name it, and as well as electrical vehicle charging infrastructure to be able to support the coming EV movement, and as well as resiliency in many parts of the country. And resiliency can take many forms. We're not just talking about earthquake and any kind of seismic activity or flooding, but also simple things interior wise, such as air purification systems and things of that nature. So especially since the pandemic, those kinds of resiliency items are becoming more and more common and coming to the fore because of wellness issues and with buildings. So I think it's just such a great encompassing product that provides a lot of benefits to the commercial property owner who decides to undertake it. And those benefits include transferability of the loan product because it's underwritten on the property itself. So it's the value of the property that's the most important key measure here. And as well as, it's on the it's repaid through the special assessment mechanism. So whether it's directly on the tax bill in some states or aside from that as a special assessment contract, it stays with the land. It runs with the land in real estate terms, so that an owner can do an improvement, sell the property, and literally walk away non-recourse, and it passes along. So it's a very like I said before, encompassing, but also flexible type of financing that you can't see anywhere else.
Wow. So, and I'm going to lean on your 23 years of experience as a property manager, as well as the 38 retail properties, over 3.4 million.
Oh, yeah. So I know projects. I come from
that's
projects.
Right.
So whether they're retrofit, new construction in this industry, what's allowable, adaptive reuse, all of that, I've touched it in some way along in my career. And I'm very used to working with contractors, with municipalities. I've had a lot of relationship connections across the board. And so that certainly helps me in my current position.
Absolutely, understanding the needs so you can explain the financing options is a key element, right? And the relationships and the experience to call out any flags ahead of time. We know Absolutely. This will work or won't work because you've been there. You've been in the trenches, so to speak.
Absolutely.
What is some of the most common uses you're seeing now? You mentioned, post-COVID, HVAC systems, right? Air filtration, things of that nature. If I heard you correctly, that means I can come to you and as part of an overall project to renovate my building, including, let's say, a touchless entry, an HVAC system. Can I do the touchless entry? Can I install that type of system on this type of loan?
So, touchless entry, we haven't tested yet, although I'm sure there are applications under the resiliency. However, building control systems have definitely been tested. So those are the kinds of things that save energy. There always has to be an energy savings component to it, so that not only are you saving dollars, but also kilowatt hours or therms, and an energy audit is typically done as part of the financing process. So it is important to look at that component of it. So certainly building controls, like when you enter into a room and the lights automatically come on, and then when you leave, they shut off. And the same thing with HVAC system controls that work the same way. In fact, we just had these installed recently on one of the major deals that we closed last year with the Drake Oak Brook Hotel in Oak Brook, Illinois, where they did a compilation of various types of energy measures, but it included these building control systems. And for a hotel, that's very important to not be wasting energy in a room all day long when no one's there.
Absolutely. When I was in India, my card, and this was a decade ago, my hotel room card was actually, I would come in the room and I'd have to stick it into a holder slot, and that would turn the power on for the whole room. So that way there was zero waste. And, the less waste, the better your bottom line, and you're being impactful. Back to the earlier statement, how do we be impactful while being profitable? What type of limitations are on the program? Is there a dollar amount limitation? Any class of real estate not applicable for CPAs?
For CPACE, which is Commercial Property Assessed Clean Energy, and that is the prevalent product across the nation. Because it's a debt instrument that's repaid, via the special assessment mechanism, via taxes, holds the same lien position as the tax bill. It has to be legislated from state to state because every state's tax laws are slightly different. And you were going to ask a question, maybe, or
no? The first position with taxes was
yes.
was interesting.
Yes. And so, mortgage lender consent is required as a result because, of course, the mortgage doesn't subordinate to anything except taxes.
Right.
So how do they consent to the CPACE loan when it becomes a part of that tax lien? Well, first and foremost, you're improving the bank's collateral, at no additional cost to them, as well as theirs is an accelerating product, whereas CPACE is not. For example, let's say in a worst case scenario where there's and this is just in very simple terms because this can get into the weeds and extremely complicated. I call CPACE the simplest, most complicated product out there. And so it's very, very basic, but there's a lot of back end stuff that goes on. And so in the scenario of a bankruptcy or foreclosure of a property, some kind of default, non-payment of the taxes and therefore of the special assessment, the entire loan for the CPACE financing does not come due. Only that which is currently or past due on the taxes at this particular point in time would be all that comes before the mortgage. And so in that sense, it becomes a more palatable product for conventional lenders to approve. And so mortgage lender approval, I would say, is first and foremost, because that could make or break the deal. In most cases, we find that we're able to assist the commercial property owner and help their mortgage lender understand how this works, and then they're not so opposed to it. But there's that occasional holdout. And when that happens, then the CPACE financing isn't going to work. Along with that, there's that energy assessment component. And so we want to make sure that there are energy savings, that there is some kind of impact environmentally to it, which is why green is in our name. And we have, that we have that goal. It helps the commercial property owners come to their ESG goals individually as well. And so kind of win-win across the board. But another limitation would be each state has different loan to values calculations. Mm-hmm. So, for example, here in the state of Illinois, which is where I reside, and so we'll talk about that, the PACE loan to the value of the entire property cannot exceed 25%. So if you have $1 million property, you can do conceivably up to $250,000 in financing.
So, if I may, if I don't own the property yet, at what deal stage can the PACE loan become involved? Because you just said 25%. That's a significant chunk on the capital stack. Your equity and otherwise. So, where do people typically bring you in or get you involved? Can I bring development play?
So it's funny. So so it works different ways with different products. So if you're doing just a retrofit project, you've owned the property, or even if you're buying a new property, it would have to happen, with full consent of the current owner and their current mortgage lender. So we would have to come in if someone's buying an existing property and then going to renovate it once they've bought it. We have to wait until they've closed on the property, and we'd come in after that. If instead, they've owned this property, they're just going to improve it, we can give up to the full, if that's all they're doing is energy efficiency upgrades, we can do up to 100% financing if they are under 25% of the total property value. And when it comes to new construction, on the other hand, the sooner we're brought in, the better, just to fill the gaps of that capital stack. We typically would replace some of the higher interest products such as mezzanine financing or construction loan. We could take some portion of that, because any energy efficiency components are those which we would, look at funding as fully as possible. We can replace some owner equity as well. However, there are always going to be restrictions by the primary lender in a new construction scenario. And we on the CPACE end would never go beyond what the conventional lender requires. And so they might require, 25% of owner equity or 20%. We could replace a portion of that, but we still need the owner to have some skin in the game.
That's what I was going to say. You're not the route to not having skin in the game.
Right.
You are the route to maybe getting the deal done, because there's a 10% gap. There's a delta that they're missing. Which, correct, as any developer will tell you, there's always a delta that they could do better on cost of money. This is fantastic. So driving clean energy investment, providing this impact for these owners. What type of drawdown is there on the program? How are the funds released? I mean, what does that look like?
Well, that too is very flexible, and it's dependent. I always like to say there are two components to every project, to every deal: property and project. On the property level, every property is so different from another. It's very individual. Every project is different, dependent on the property. You put the two together, you get a third entirely different animal. So one of the things about financing in the CPACE industry is that every deal is considered on a case-by-case basis for the most part. I mean, there are some things that are, allowable across the board, but you want to take a look at the individual project and what it's doing, what it's offering. And so basically, you would have to see what the needs were. If it's a project in process, there might be, if the financing gets done in time, there might be draws, just like construction draws would happen. If instead, most of the work has been done before the financing comes to fruition, then we might pay out the entire amount upon closing. Sometimes the mortgage lenders will have certain restrictions of escrowing. And so, that's another thing to consider. So it's really an open and flexible program. And I just thought of another thing that you had asked, Andreas, and pardon me if, I get to talking and I get so passionate about PACE that sometimes my mind goes faster than my mouth. But you were asking about what kinds of projects are allowable, or what is allowable under commercial PACE. So commercial is any kind of income producing property. And so basically, office, retail, industrial, and even multifamily. If it's 5 units or greater, and typically, one owner leased kind of scenario works best. But all kinds of unique special use types of projects, including nonprofit organizations, even though they typically don't pay taxes, if they show the ability to be able to accept a special assessment on the property, that works. We do everything from self-storage to there are agricultural uses as well, and so it runs the gamut.
So the CPACE, commercial PACE program for income producing properties, all classes with some special exemptions maybe. But as we talk about that, you said office and retail. And how can so I have a new tenant coming in, triple net tenant, and I need to retrofit significantly. I've got to put money in. Can I share that cost and benefits straight through to the tenant? How does that work?
In most cases, yes. So the simple response is yes. I've noted it from my property management days that some leases may exclude special assessments being passed through on the tax bill. And so that is one scenario perhaps in which it would not work. So we always tell our owners during the process to ensure that the lease is taking on a greater expense.
Understood. Well, as any owner would understand, but just like the cost of money, right? If we can offset it and pass it, we will as developers.
Precisely. And the whole concept of PACE in general is that the increased loan amount, because you're putting a loan on, so it's an automatic increase of expense, but is offset somewhat or to the most part by the energy savings. And initially in the first few years, it will also have added savings when it comes to the operating expense for repairs and maintenance from installation of a new system, and so it just has a lot of benefits throughout the life.
Throughout the life cycle of the real estate, of the asset. And I was just listening to, I think the Harvard Business Review was talking about how Walmart 8 years ago said, we're going to put solar panels on our buildings. And it was not affordable then. The technology wasn't where it is today. And presumably if I have my building, 10,000 square foot building, and I put solar panels
That's
up,
right.
PACE will pay.
And what so it's wonderful that PACE is so, again, I'm going to say it's flexible, it's very open-ended in a lot of different ways. Some states try to really legislate it almost to death, putting so many different restrictions. But the original concept of PACE was to, even be encompassing of technologies that may not exist today, and that as they come about, as long as they're creating the energy savings and having that impact on the environment, would be eligible.
So really having you on as an owner, as an investor, as a developer, having you on speed dial whenever there's a consideration for that project, when I'm building my capital stack, is the first call. And when I own the building, anytime I'm bringing in a new tenant, or there's a large capex improvement expense that I'm about to undertake, again, calling and saying, hey, here's my list. What can we do, if anything?
Absolutely.
And as far, let's say I get a loan from you tomorrow. I'm 3 years down the road here on my 10,000 square foot building, and now I'm going to do something else. Something else comes along, and now these windows will transform the sun into heat in such a way that I don't even need heat. Can I stack the loan one behind the other?
Yes, you can. And it all It's possible. It of
if
course
you need it?
depends on at that point in time what the loan to values are,
Of course.
and of course I'd be remiss if I didn't mention that combined loan to value together with any outstanding encumbrance mortgage, cannot exceed up to whatever the a capital provider sees as their risk level. Inland Green can go up to 100% combined loan to value.
So I've got to ask, is there any provider that just no way, not going to happen? Or is that an unfair question that we can't answer on this call?
No. It's just that sometimes, and maybe even dependent on the deal, we might require only up to 90% of that valuation. Again, like I said before, from deal to deal, things can change, because it's all dependent on the quality, the nature of the property, and the project.
So going back to traditional financing, I have a relationship with my bank, a couple of lenders, couple investors, got a track record. They love me, which means the money gets to me faster, right? It's more likely to be approved. For the CPACE program, how long does it take traditionally just to get your first one done? And then once you build a history, does that shorten? Does it get easier?
Oh, absolutely. I noticed that each deal becomes easier and quicker as it goes along. The first ones are always, a learning curve for all the parties involved. And like I said, there are those uncontrollables of the energy audit, the mortgage lender consent. Another uncontrollable eyesight is the owner themselves. How organized are they with their paperwork and, meeting all the substantiating document requirements. And so every step of the way is impacted by these things. Then on the close to the tail end, then you've got the documents and even lawyers need to stay in business. And so, everybody has to have everyone look at the documents and make sure that everything's flowing appropriately. And God bless them, for that kind of work that they do, because it's, it can get very tricky. And then the governmental authorities, who are the ones who are partnering on the assessment contract, and whether or not they are doing the servicing or the capital provider is doing the servicing, there are many different things to consider on that end too. So I've seen deals, typically we say most deals can close within 30 to 90 days, just like any other financing would take. I've seen CPACE deals go as long as I've done one in just about 3 weeks. So,
wow.
So it all depends on, all of these many different factors and how they interplay with one another.
So, as talking about factors, is there any regulation or any chance of this going away at a federal level, or are you seeing bigger buy-in, big awareness just because of this generational shift on into impact?
It's growing. It's definitely growing across the nation. So I believe 39 states are now, if not fully legislated, on the way, and there are several others still considering. There are at least 27 programs within each of those states. Not individually, 27 programs across the 39 states. And so basically you need to have a program in place to be able to facilitate a transaction between the deal stakeholders and the governmental taxing authority. And then, providing a smooth process. Green, we are able to finance anywhere there's a state-enabled legislation and there's an active program, and sometimes we go in and we have to also create our own little programs in order to get things going.
It was going to be my next question on how many states does Inland service and how, and it sounds like anyone can call anywhere in the U.S. And if it doesn't exist, Inland would champion a program to get it done for the right deal, for the right person, potentially.
Potentially, yes, and it all depends, on a lot of different factors, and because sometimes it's not possible without boots on the ground, but we do our best.
Well, I mean, it's always interesting to learn about how I can save money, bar none, and reduce my capital costs, as well as I said, driving that impact, as you pointed out. It's now onto and we rolled right through it. Introductions went right into talking about what you do because we're passionate and you're passionate, and it comes through. How and why do people reach out, or when can they reach out? How should they reach out to you to talk about this program?
Oh, well, everything is so internet related today. People can just go to the website first and foremost. Reach out to us, to capital providers across the country, because it's very important work that we do, and certainly Inland Green Capital can't fund every deal out there, and there are more than enough deals to go around for everyone. And so, we do like the open market concept, and as far as capital providers, as far as contractors, making this available to as many commercial property owners. I like to say that CPACE is equitable kinds of programs out there. Since we are not particularly underwriting the property owner, but the property itself, there are so many opportunities out there to improve properties in neighborhoods that are sometimes neglected. And so there's an affordable housing component as well. HUD across the U.S. is beginning to accept the CPACE product as a partner. And so there are lots of opportunities opening up.
That's very interesting. So apartments, everybody knows last year, apartments are a booming area, right? So yes. How is that changing? Your CPACE will now be available? Early on the call, you said any commercial income property, but affordable housing, you're talking 40B development deals.
Yes. So dependent on consider it as part of the capital stack. It can vary, but HUD has issued a statement that they will partner with CPACE. They will approve it in most cases on a state-by-state basis. Then it has to be handled with the regional office. There has to be a letter of determination by that state's attorney general, and it could take a little longer to get a deal with HUD done, but they're coming around. Also nationally, there is a Fannie Mae and Freddie Mac are taking a look at CPACE as well across the nation. Only 4 states out of the 39 currently have a residential PACE program. And so that is another upcoming sector across the nation as time progresses.
So, and only because you brought up residential, I wasn't going to do it, but to dispel any fears here, residentially, there was talks about these programs. They come in, you get a free solar panel. And it's not free. It could cost you, because the person providing that loan and that type of financing, that green financing, sorry, it was also green as they sell it. The guy qualifying you is the contractor. This is the opposite of that. This is the most stable way to reduce your costs, if I'm hearing you correctly, in a green way to be impactful.
Yes, it is. I would certainly qualify it as
well, and with your background, that's no
such.
small thing. So that's a great applaud. And if I call my lender and he doesn't know about PACE, everybody should know, I'm guessing.
I'm sorry, I missed that because you froze up just a little bit. That's okay.
If I call my lender,
yes,
and I ask him about PACE, and he goes, "Huh? Is that possible today?"
Oh, absolutely, because it is such a new industry that a lot of people still don't know about it. That's why I'm very big on promotion of and education of, because that's the only way the word is going to get out. And that's why, although the person who has the relationship, so the commercial property owner has the best relationship with his lender, as we always ask that they start the conversation first, and we can always give them backup in the way of printed materials or a copy of a sample blank lender consent form. But then we can be brought in conversations that the lender will understand. And so we have a team of area. So I think we do a pretty good job of that. I would say probably 98% of our deals have closed once we've received lender consent. And maybe there have been, just one or two that have refused. So that's pretty good.
What does that look like in dollar volume, just as an idea?
Well, I haven't taken a look at that lately. Fair because point. I am so consumed with promotion and education and getting out there and the business development aspect. And so my expertise is a little bit in different areas.
No, fair point and unfair question. Let me backtrack and say.
But across the nation, I can tell you, in the history now of CPACE, and this is thanks to our
Adelius, WhatsApp audio.
Sorry, go ahead.
PACE Alliance, we do have stats out there that say that over $2 billion in just commercial PACE alone have been financed over the last 10 years, as well as, created over 1,800 jobs nationwide, and, and just a wonderful, great program that is growing by leaps and bounds. And we see an almost geometric progression of growth. Once a CPACE program is established, it just doubles and triples every year after that. And so it's been great.
So doubles and triples. So the 2 billion, 10 years, how much of that was in the last, let's say, 2 years?
Oh, a good majority of it.
Majority of it. So it's just expanding. It's a compounding good you're doing by pursuing this.
For example, in New York, $100 PACE deal was done not too long ago, and so the industry itself just keeps growing.
I love it. It's all wonderful. I think you are right. We could talk about it in detail forever, but really it's up to the people listening and the industry itself now to call and ask. I've got XYZ. How can I be more impactful and intentional in my ownership to create a better world, to create jobs, as well as cost of money goes down, and it's good profit and impact in alignment, which, hey, they haven't even figured that out for car batteries yet, but they're trying. So,
Well, and even I'm noticing in the solar industry, because we've done quite a few solar projects. The technology is always changing, and I'm sure we're going to see more and more change and more opportunities for PACE in the years to come.
I love it. And they will be here. And we're going to talk more about that on our next show if you'll join us.
Sure, I'd love to.
Monthly roundtable with our other co-hosts. That all being said, thank you for joining us today and sharing some knowledge. And can't wait to have you back to talk more about the overall green initiatives and your work in nonprofits. I mean, it's truly a pleasure speaking with you. As far as reaching out, inlandgreencapital.com. No, inlandgreencapital.com.
No. So it is actually www.inlandgreencapital.com.
That's what I thought. Yes. Okay.
Yes.
Well, that's
my email address is annamaria.kowalik, as spelled out.
All right. Thank you again, Anna Marie, for joining us and spreading this impactful message to our listeners, to the industry, and really just being a driving force for good.
You.
That's all for this segment of the Real Estate Roundtable with special guest Anna Maria Kowalik. Did I say that right that time? I think I did. Find me, Andreas W. Senie, at Twitter, online at all your social channels, or you can always reach out through the CRECo.ai platform or direct 203-307-2242. And I look forward to seeing everybody next time. Be safe.